Uh, on this topic, there's very little talk among practically everyone, I'll be honest, in the political spectrum. Economics is a topic that has kind of been surrendered to the neoliberals, and the only criticism you hear of it really comes from the left, and they just repeat communist talking points from about 100 years ago. So you don't really hear criticism of this whole current system with any kind of depth or analysis. Most economists I know and follow are themselves either Austrian school libertarians um, or just mainstream economists, and they don't have critiques of the system as such as it functions. More like they have issues with certain policies, how they're set. Most of the time, when you listen to like macro voices or you read Zero Hedge, they want just as free markets as anyone else. They just have certain issues with the policies they're set. Another thing that you hear is, of course, this whole environmentalist Green New Deal thing, which is correct in a few things, that it ties environmentalism to economic issues. And that is quite correct, because you cannot solve one without the other. The economic policy is, of course, the cause of the environmental issues. Their proposals are, of course, quite idiotic and ridiculous. Like here in the Netherlands, they're talking about investing €1 trillion in solar panels, windmills, electrical cars, loading poles for electrical cars, transforming heating to electrical, transforming cooking to electrical, and then powering all this transformation with solar and wind panels, which isn't really practical. Nuclear centrals might be able to do it, but even then, the costs are huge, and it doesn't address a lot of the fundamental issues. Another thing that you hear about, of course, is this constant talk about inequality. Piketty is one who talks a lot about inequality. Of course, I think he has some points, like most leftist economists do have some points in that they see the right problems, but then they propose very wrong solutions. It's always the same, it's since Marx, really. But inequality is certainly an issue, but then their solution is always, well, tax them more, distribute wealth in some way more. The issue is that if you're looking at redistributing the profits, you're not addressing the entire system. And it's the whole mega corporate, international, global system that's wrong, from the financial to the logistical to the energy point. So I want to address all these points here and kind of present you how I see this whole environmentalist and economics point. And I've got 4 main important points here, which is oil logistics, which ties into plastics, which is an important one. Then decentralization and localization of the economy. Then usury, which especially I think in terms of monetary policy and certain aspects of financial markets. And then another important one is the value of labor and the production and source of value, which I take some cues from Marx from in that one. So I'll start with the oil and logistics and plastics thing. So the first thing is this whole globalized economy relies on cheap energy, and cheap energy in the form of oil, because we don't have any other form of energy that is as easy to transform and transport as oil, that is as abundant, and that has as high a concentration of energy. Hydrocarbons have a very high density of energy. You can do a lot of the same things that you do with oil with electricity, of course, but your issue there is storage, creating it, transporting it. It's not, you can't really power ships that easily with electricity. Like, you can, of course, build nuclear reactors and power them that way, but that's very expensive. You can't just turn every international ship into a nuclear sort of carrier. It's not really possible. Diesel is, of course, possible to produce by plants. The issue is you only get like a return of 1.5 for every barrel of oil if you grow diesel organically. So that's not very profitable. Whereas oil is very profitable, because for every barrel of oil you invest into pumping up oil, you get, depending on the oil field, 10, 12 barrels back. Some oil fields more. In the past it was much higher. You could even get 40 oil barrels per invested oil barrel. So you have to look at it this way. You have to always invest something to get something back. So it costs oil to pump it up. You need, of course, to fuel the machinery, the the networks, the prospecting. Interestingly, the prospecting for oil has stopped in recent years because they can't find any big oil fields anymore. It's too expensive. At any rate, the point is, without this cheap source of energy, we couldn't outsource all the labor to distant lands. The thing that facilitates this whole idea of we produce our clothing and we produce our clothing in Bangladesh, and we produce our steel in China, and we produce plastics in India, and then we ship them all over to Europe or the United States, and then we make finished products, industrial products out of them here. That only works if it's cheaper to ship them over and labor, because of course the labor costs are lower, which is not a permanent thing. There will eventually be a middle class in India, there will eventually be a middle class in China, and price of product will go up. Then they'll outsource to Africa until eventually you run out of places to outsource your labor to. But basically, the cost of labor is cheap. There's no regulations on environmental or safety issues. That's why it's cheaper. But even if that were true, if it were more expensive to ship it over here, it would still be, in terms of pricing, cheaper to produce everything in Europe and source it in Europe. So oil is very important in this dynamic. The issue, of course, is that according to pretty much all science, oil is a finite resource. There is peak oil at some point. Now, every prediction of when peak oil comes has been wrong. We could have oil for another 100 years, 200 years, maybe the last millennium. It's hard to predict. We do know that returns on investment have been going down, and you don't actually need to run out of oil for you to not be able to use oil. You only have to have a one-on-one return on investment, or maybe even two-on-one. As soon as for example, if pumping up oil from the ground reaches the same level of profitability as simply growing diesel from plants, then you might as well just grow diesel from plants rather than pumping it up. So that's kind of the point. Peak oil doesn't mean oil runs out. It means oil is no longer profitable to pump up. So you need to start building a system that is insulated against the loss of oil as a source of cheap energy. Very hard to do because, as I said, most other forms of energy aren't that dense. We have coal. Coal reserves are much larger than oil reserves. But again, that's also a finite resource, and coal is difficult to wield. There's, of course, coal liquefaction process, which you turn coal into sort of synthetic petroleum. But that's, again, more expensive than just pumping it up from the ground. Although it would be a viable step in a transition process to do that. Point is, electricity is the better option, but has transportation and cost issues. So that means you need to restructure your economy fundamentally to deal with the fact that you run out of oil. That's not the only reason, though, but let me focus on that. If you shorten your logistic networks, you reduce costs immensely. Even if labor costs are higher, transportation costs are quite a big chunk of pricing in today's commodities and even services and so on. Although services are, of course, more and more online now. So if you source your labor costs locally and your production locally, you don't need that oil, you don't need that density of energy, because you can work with electricity as a source of energy. Especially if you build if you build a nuclear power plant in a town, you put an industrial production facility next to it, and your market for these industrial products are like just one country, or maybe the surrounding direct geographical area of about maybe 1,000 kilometers. Then trains and electrical trucks would be sufficient for the transportation and service of this whole system. So that's one. You need to shorten the logistic networks. Now that has a factor in that that's good for the environment, because one of the main things is that oil is of course polluting, but especially the industry being in the third world and being so deregulated, that's one of the issues that causes pollution. Everyone's always going on about plastics in the oceans and so on. That's mainly coming from India and China, because they don't do environmental controls. Whereas if we sourced it here in Europe and we sourced it in the United States, we would have much more control over where industrial pollutants go. So it's not only out of an economic concern that you should do it, it's also an environmental thing. Then plastics in and of itself is an important one, because plastics are of course made from petrochemical products, usually side products, but we use them for absolutely everything, from cutlery, pieces of pans, pieces of computers, even components of firearms. Everywhere you look today, you'll see plastics. Industrial plastics, soft plastics, all kinds of plastics. And we kind of have a system that try to imagine if you had no plastics in your house. All the things that wouldn't function. Like your water boiler probably has plastic components. Your pans have plastic components. Your fridge, your dryer, these all have plastic components. Your shower head's probably plastic. Pieces of your toilet are probably plastic. Plastics are absolutely everywhere, and replacing those with more traditional materials is possible. You can revert in a lot of cases to like cloth, glass, wood, but that's all very, very expensive. It's considerably more expensive. That's the entire reason we use plastic for most of these things, because it's cheaper, because it's much easier to mass produce huge amounts of plastic, whereas, glass of course requires sand to blow, and we are already running, actually globally the price of sand is increasing because there's a shortage, because construction with cement requires so much sand, so there's already a commodity shortage there. Wood of course requires quite some time to grow, and the same thing with non-synthetic cloth. You need to either grow like jute, cotton, or hennep to make the fibers out of this, to make the fibers for creating cloth. So that's all, you'd have a much slower cycle in economics, because there would be a bigger shortage of these products to finish up all these industrial products. Would be used for agricultural, of course, and agriculture currently mainly runs on subsidies, especially in Europe, so there's an interesting point there. But the point is, plastics is probably very hard to replace. Now, we can make plastics out of plants. Here in the Netherlands, we have a company that makes industrial plastics for the automobile industry in Germany out of weed, the male marijuana plant, not the female. The female is the one with the active drug, basically, and the male one, we used to use it for rope and so on. At any rate, the oil from that, you can produce plastics out of the oils from plants, and they use the marijuana plant because it grows very fast, it's very resistant to all kinds of diseases and insects. You get about 3 crops a year, and you can make paper from the remaining, from the stems, you separate the sap and you make plastic from that, and the stems you turn into paper. So it's a possible business. Of course, this again would require agricultural land. And if you're looking into all these sort of options to replace the oil-based system, the farmland is going to become a prime, because, well, maybe you need to replace some parts of it with diesel, which you're going to grow from like kohlrabi seed. Some plastics you're going to have to replace with plastic-based or plant-based plastics. If you're going to not go for plant-based plastics, but you're going to go, for example, like cotton and wood, you're going to need more land for cotton farming, for wood, for growing forests. Again, farmland would go up substantially in value, and I think that's not actually necessarily that bad a thing, because it would be more locally sourced. It would be, the shorter the line of the economy is, the better it is for the local economy, right? Because you spend your money in your local circuit. So if you source your economy more locally, it's more profitable for your own country. This whole idea of buy British, buy American, buy Dutch, that's actually not untrue, because if you spend it within your own country, it's good for your internal market, and your internal market is always the strongest part of any economy. Anyway, plastics is a big factor in this, and replacing plastic is someone that should be looked into and how to do it. And then the factor of land pricing and so on is another interesting one. Anyway, we have to look into options to replace oil. Another thing with plastics is, of course, that they're very unhealthy, with xenoestrogens and so on. They pollute the oceans, kill animal life in the oceans. So replacing plastics, good idea, especially if it is possible to do it with organic materials such as wood and cloth and so on. But this is, of course, not in all cases possible. The thermic insulation of plastic is pretty much unmatchable with natural products, basically. So you're going to always have to have some plastics. But again, we can make plastics out of plants. But there's a lot of factors there in an analysis that should be, it should be part of the discussion. Now, to go to the whole decentralization and localism thing, and also the value of labor. I think the value of labor is considerably undervalued. I'm not really a Marxist in that I think labor is the source of all value, in the sense that value is definitely created by markets, because there's demand creates value, and scarcity creates value. However, without the labor to produce these products, you wouldn't have anything to put on the market anyway. So in the end, labor is the source of all value, not because the pricing mechanism is determined by the labor or the value itself is determined by the labor, but because someone needs to do the work to produce the corn to put on the market, to produce the steel to put on the market, to produce the fridges to put on the market, and so on, etc., etc. Even in service industry, someone needs to do the waiting of the table, someone needs to do the accounting, someone needs to do, the usury in the financial markets. It's still labor that needs to be done. So labor is considerably undervalued in the West, but of course it's much more undervalued in the third world. But the value of labor is of course relative to the value in the market generally and the level of the economy and so on. It's all relative, and we're kind of exploiting underdeveloped countries to outsource our pricing to them, which would be impossible without oil again. So another thing that's important with decentralization and localization, and here I kind of turn to a more distributist idea of economics, is capitalism works if you have a lot of capitalists. Capitalism doesn't work if you're just talking about financial markets and huge mega corporations. Local economies where you have a lot of shopkeepers, you have a lot of entrepreneurs, you have a lot of skilled craftsmen who work on contract basis, which is sort of where the economy is going in the Netherlands. Most construction work and skilled labor is turning into contract work and is therefore starting to become better paid than most low-level office jobs, simply because, again, this is also a market question. There's much more demand for like plumbers and electricians and bricklayers and carpenters than there is for someone who can do Excel, because unfortunately several generations of young people have only gone to university, done sociology or psychology or philosophy, and not learned like a practical skill, and now there's a shortage, of course, of skilled labor, and there's an overflow of academics. It's all markets. Point being, if you localize the economy, the value of labor goes up because, well, the logistic network is shorter, so where materials are produced and where the labor is done closer to each other, costs less energy, markets closer, spending is closer to each other, value goes up in general, demand is localized. So that would generally be an improvement. That's the whole thing. You need to look at the entire economy in general and ask yourself, so why is this inequality here? Why is this environmental problem here? It has a lot to do with the fact that the scale of everything has increased to a point that it's simply detached. It's the same thing with politics. The scale has increased to such a point that it's all detached from the local, from real people's concerns, issues, and so on. It's become a managerial state. What's the name of that book? Not the Peter Principle, not that one. I forget. But the point is that the more local politics and economics and so on are, the more it's capable to address local issues, especially in the case of economics, for example, it's more able to address demand, so there's not as much overproduction globally. You know, the system now, how it works, is Coca-Cola, for example, manufactures as much Coca-Cola as it can, and then it tries to create demand. Movies very much work like this, entertainment products. There's not playing into market demands, although this is still the case in some sectors of the economy, especially commodities, but there's the attempt to create demand by big corporations. So just to sell the product. It's not a question of is it necessary, does this help general, prosperity, does this help grow the economy? I mean, it selling movie tickets grows the economy on paper because money accelerates, but nothing has been created. Money acceleration theory of economic growth is something I have an issue with, but I'll get into that on the monetary and usury policy parts. So the more local the economy, the better, more able to address local market demand and actual market demand rather than trying to create demand. If you live with the people you're selling your commodities to, of course, you're also less inclined to profit off them. Distributism is an interesting one to look into this here, especially because distributism is a bit of a neglected economic theory, which I think has a nice sort of center point between liberalism and socialism. And you can take points from both. I think Marx has some points, especially, accumulation of capital, he has a good point. Labor as value, he has some good points. But of course, when he talks about like class warfare and so on, that's all nonsense. When he talks about the innate solidarity of humans, all this, that's very vastly exaggerated. To get into the usury and the monetary policy stuff, I firmly believe that the productive classes, which is the middle class and the the skilled working classes, the people who really produce the value, which everything is based on, are being exploited on two sides. They're being exploited, of course, by a parasitic underclass of structural unemployed who refuse or can't work, who take value from them. This is only a small part of it, proportionally speaking, but they are still, they're not adding to the society and production as a whole. And in this case, of course, you're mainly talking about certain groups of structurally unemployed immigrants. In the Netherlands, for example, 70% of Somalians have been unemployed structurally for more than 10 years, 70%. And most other foreign groups, it's the same thing, immigrant groups. But the exploitation of, the productive classes, the ones who create the value, who create the labor, who basically make sure that, so how a market works is, say, financial derivatives are a huge part of our economy. Our GDP is for a disproportionately large part financial markets. And how it works is basically you create a product, a business creates products. The valuation of that business, that goes into financial markets, either as shares or, what's the English word for obligaties now? Bonds, shares, bonds, futures on commodities they produce and so on. And that's all fine. I could explain, of course, why there's shares and why there's bonds and why there's futures. These three core financial products are actually things that, if you look at them logically, they're actually quite useful. You get into issues, for example, with day trading, where stock isn't valued based on what the actual business produces, but it's based on markets manipulation, on day trading, and it's all overvalued. So there should be looked into this issue of these weird fluctuations of value that don't reflect any real underlying fundamentals. The fundamentals and the shares very often are completely detached from each other. They're only corrected every quarterly report a little bit, and then they diverge again. Bonds is mostly fine. The only thing with bonds, you could say, is they're speculated on. That's the whole thing with financial markets. Most of the financial instruments themselves makes sense, but then the speculation on it is where the issues come, especially with futures. This is the case. At any rate, the financial markets are very detached from the actual production, and the production is where real value is created, where people's demands are satisfied, where value is created, and the actual economy grows. The whole idea of the monetary acceleration theory, which is kind of what we've been doing since Keynes, and which we have been very much doing since the 2008 crisis, is we create money, inflation, and to invest so that the real economy can grow. And then the real economy will catch up to the theoretic monetary economy. So the value, the monetary value in the economy is higher than the actual value in the economy. And the idea is, well, we'll invest all that created kind of fictional value, and we'll use that as like taking an advance on the future, investing it and making sure the economy gets out of its dip, accelerates, and then the economy will actually catch up to the monetary value. The issue is, of course, we've printed I think the Americans have printed $21 trillion, and the economic growth has been fairly stagnant. Even under Trump, it has been going up, but it has barely catched up. And the financial growth has been in financial markets. That's a stupid thing, because the investment of the printed money, rather than going into creating this value in the actual economy, the productive economy, has all gone into speculation on financial instruments. Everyone knows it. Everyone knows it's a huge bubble. So usury is parasiting of the productive labor of businesses and people through inflation. Basically, the banks get essentially what you could say is free money from central banks, and they invest it all into financial instruments, growing the value of the economy, inflating the amount of currency, therefore deflating the real purchasing power and real value of what people hold. This is especially an issue for savings banks, which don't exist anymore practically, and pension funds, which is something we have in the Netherlands. We've got very large pension funds, almost, I think, 2 trillion at this point in pension fund investments. That's all revaluing at a constant pace. So it's kind of like inflation is kind of a hidden tax on the population. It allows the government to government debt devalues, and people's savings devalue, and people's purchasing power devalues, because their salaries never catch up at an equal rate to inflation. In the Netherlands, in real terms, in terms of purchasing power and wages, it has been stagnant for 10 years. And if you look at the historical trend of growing purchasing power, since the 1970s, productivity has gone up, but real purchasing power has almost not gone up. And that has a lot to do with the fact that the monetary system was decoupled from the gold standard. And I'm actually kind of a believer in the gold standard. Point here being is that we've got a financial system that parasites off the middle class and the working class, the people who actually produce the value, the people who buy the commodities, fulfill needs get fulfilled, then other needs are created, therefore more businesses can grow to fulfill those needs, and that's how you grow an economy. You basically fulfill needs. That's how an economy grows. You don't create fictional needs such as movie tickets, such as addiction to alcohol and other products. That doesn't create surplus value, because it doesn't fulfill a need and then create new needs. That's fictional growth. And with this monetary policy, basically through inflation especially in the Eurozone, we're being parasited off by this financial market who uses it to enrich itself, because they don't hold things in fiat, of course. They buy financial instruments, they buy assets, they buy brick and mortar, they buy gold, especially, elite banks, even central, the people. The only thing with central banks is central banks are privately held, and they have shareholders, which are the banks themselves, the biggest banks, and they are, they make a profit off of printing money. So the monetary policy is a big issue. Usury is a big issue, and that facilitates the existence of mega corporations in and of itself. Because, for example, the way we have it structured here in the Netherlands is pension funds have a mandatory amount of profit they need to make each year, which is about 8%, something which is quite hard to do in the current financial markets. So what do? They're a piggy bank for the state, because they buy state bonds, because they kind of have an obligation to buy state bonds, because state bonds are, according to, general knowledge, safe and a good return on investment and so on. Not true anymore, really. German state bonds have dipped below zero in the past. I think they're at zero now. Then they are also the mega corporations basically get this inflow of cash from the central banks. The printed money all goes into the stocks and bonds of these big businesses. So they have huge liquidity, and this liquidity then they invest in actual assets. So for the big businesses and the big shareholders of these businesses, it's all very profitable. The printing the monetary system, such as this, and it's all at the expense of the actual productive people who create products and services and commodities. It should solve that. Again, localizing financial services. One of the reasons savings don't... So printing money, for one, needs to be cut completely. You could go back to a gold standard, but even if you do fiat, you can't go around printing this much money constantly with this whole acceleration theory of economics. It does not work. Especially because the incentive for the banks is not to invest in actual productive businesses, but to just, inflate their own assets and of mega corporations and or the financial instruments, and then turn those profits into actual assets like gold, like brick and mortar, so on. So you need to do something about that. One thing you could do is, of course, decoupling savings banks and investment banks again, which in the Americans with Glass-Steagall destroyed, and then kind of the rest of the world followed them. Savings don't earn you anything anymore, because the bank doesn't need your money. The bank gets free money from the central bank. What does it need your savings for to invest? It doesn't want your money, in fact. They're talking about going to a -8% intrabank rent, because there's far too much liquidity on the market, and they need to take some of it out, and nobody's actually able to turn this liquidity into productive labor. So they don't want your savings. Your savings are just a cost to them, which is, of course, illogical, but that's because of the monetary printing system. So that's what you need rid of. You need rid of the printing. You need to localize your banks, have them become credit unions again, have them become local savings banks again, so that a bank that takes savings isn't going around taking money from the government and investing that in the global economy. Especially credit unions are a good idea. Credit unions are basically like your local businesses unite, put their excess profits into a semi-bank, and that bank then lends it out to other businesses in the area, so that all the profits from a local area are centralized and then made sure to invest again in the local area to grow, the economy there, and the more locally the better, really. So all of that is kind of the issue. All of that is the scale and the globalization of it, and the cheapness of energy, and the undervaluation of labor. These are all some kind of points that I'd like to hear more people talk about. Especially the left irritates me with that they usually do point at issues that are genuine, but then their solutions are always so stupid. Like, if you want to solve this supposed, like when they talk about environmentalism, right? They talk about CO2, they talk about stickstof, they talk about all these invisible issues, global warming and so on. Why not address the actual measurable, directly visible issues? Plastic pollution in the oceans, chemical pollution in the rivers, excess use of cars, and therefore, pollution in the air in the cities, these sorts of things you can measure. And these can all be solved mostly by localizing things in your economy, by having the where raw materials are produced and where they're transformed and turned into products shortened, and where the markets are and where the products are made shortened. This huge, thing where we're always commuting in cars from sleep cities to blah blah blah. The daily commute in cars. That's again that's labor being too far away from markets. Labor needing to be transported, so you should localize those labor markets and distribute the centers of production so that they're more decentralized. This is how they used to be in like the 19th and early 20th century. Is you'd have a city with an industry, and that city kind of worked there. So you'd have like Kruppstahl in Köln and Kielwerf in the Germania Werft in Kiel. You'd have Philips in Eindhoven. These sorts of things, and they wouldn't have to travel very far for their work. I have this in my sector of work, where you travel throughout the entire country for work to do all kinds of little jobs. Basically, you drive. Sometimes I drive from Rotterdam, where I live. I go to like Leeuwarden, Groningen, Arnhem to do all these little jobs, to take measurements and so on. Whereas they could perfectly well have someone locally sourced from that province there. But it's all economies of scale is the reason why they don't. All the work I do is very heavily concentrated in the Randstad, because that's where most of the demand is. So that's where most of the businesses are, and therefore most of the labor gets concentrated there. But then the labor needs to be outsourced to all these other places, because there's the network, the logistics for it are simply gone, or have never been built really. So more local economy, less pollution, less consumption, it takes less energy, better for the planet in general, better for the stress of people too. Sitting in all day in commuting isn't that fun. You could do more productive things if your commute is like 15 minutes by metro rather than 2 hours by car every day. That's more true for America than Europe, of course, but even so, commuting is an issue of too big upscaled economics. Other point, of course, is which is a very obvious one. You never hear the left about population control. Very basic idea. More consumers means more consumption of products, more consumption of resources. First step to make sure the planet doesn't get destroyed is less people. Where are the growth sectors? Well, obviously, third world. That's racist, and we can't do anything about it. That's kind of an issue. Can't really see a way for the modern left to try and address that. They'll always put these social issues above actual issues. They're always you will generally find these articles where they say nuclear power isn't the solution to the environmental crisis because it doesn't dismantle patriarchy, it doesn't address gender issues or whatever the fuck, it doesn't dismantle colonialism. Their social issues are generally more important to them than what they claim to be about the environment. I see this very much with green parties here in this country. They're nominally all about the environment, but then if you look at how they vote and how they behave, they kind of go along with neoliberalist economic policies. You don't hear them about dismantling the financial markets and so on. Financial markets is an issue I have a hard time exactly thinking of ways how you could best address it, because the thing is, a lot of financial instruments have very logical reasons for existing. Some don't, like contracts for difference. That's pure speculation. But futures and bonds and stocks, that makes sense if you think about it. You always need to have some form of financial markets. You need to have ways to get liquidity to businesses so they can grow and to make up shortfalls and so on. Because otherwise, you're going to have constant, if you think boom bust cycles in capitalism are bad now, think of it without any liquidity to catch shortfalls and so on and provide growth, and then you really have some businesses going under all the time and new ones having hard trouble starting up. So you need liquidity in the market, certainly. The problem is, of course, that there's speculation on these financial instruments, and how you would deal with that is difficult, because there will always be the profit motive for people, and always short-term thinking. You always run into the tragedy of the commons issues, where like if you were to ban the selling of stocks, like you can only buy a stock from a company and sell it back to a company, and the idea of the stock is that you make profit of it. Firstly, that kind of goes against the idea of the right of holding free property. But secondly, then the incentive to actually buy the stocks, of course, goes down because quite a lot of stocks don't pay dividend, and then and the entire reason that people buy the damn things is to. So, now you could say that's maybe a good thing, but again, I have a hard time lately picturing in front of me how you would deal with certain issues of the financial system. I think quite a lot of it would be solved by not having it be so globalized and by having basically your financial market is mostly in the hands of people in the same country. Therefore, there's less of this. There's less of a market for all these products. So there's for the financial products. So there's less demand. There's less acceleration in the value. There's less fluctuation because the market is smaller. Now, the monetary policy definitely is a very big issue that needs to be solved first in the eurozone. It's noticeable and it's something that gets talked about. Not so much in the sense that inflation is a hidden tax, but on the people. Mostly they talk about the pension funds and they talk about the unequal conjuncture cycles between southern Northern Europe, and Northern Europe kind of has turned Southern Europe into an economical slave. Basically, they're just they're markets for northern products, and they're sources of cheap labor for northern markets. But their own local economies have been completely destroyed through the financial through the monetary policy of the euro. If you go to Spain or Portugal, most of the industries are gone. There's huge youth unemployment. They don't really produce anything anymore. They have tourism as an industry, but most of everything else. I saw this in Portugal. Shoe industry, clothing industry, quite a lot of the shipping and heavy industry was all bought up, and it was all shipped to Southeast Asia. This was in 2004, 2005. Then there was supermarkets. Supermarkets were all taken over by French and German ones in Southern Europe. They were all competed out of the market, taken over. Small. Another thing is that's the thing with localism versus global economics. Big supermarket chains versus small businesses. Small businesses are more expensive, but they are more environmentally friendly because they can source their products locally. The reason huge supermarket chains are cheaper is economies of scale, of course. They can buy in larger scale, they can afford to take losses on certain products and profits. So every supermarket takes losses on certain products, but they make up the shortfalls on other products. That's how they can keep certain products cheap. That's economies of scale, and that's a hard one to address. But again, I think that if you didn't have the cheap energy, then the economies of scale naturally go down, simply because the price of transportation would go up too much for it to for you to have that kind of scale. So oil is the big primary one to deal with. The cheap energy one is the big primary issue to deal with, because it's the source of everything. Keeping labor costs down is because cheap transportation, because they can outsource labor. Raw materials, sourcing them from far away is only possible because of cheap transportation, etc., etc. Shorten the distance from raw materials to labor to markets, and from labor to the markets themselves, like I was talking about in traffic units. These are all important points. I think that these are things that should really be talked about more, especially by nationalists, because we're the people who can honestly look at all these things without the dogmatism. And really, economics is an important point. If you don't talk about economics, if you don't talk to people's self-interest, if you don't tell people how your policies are going to profit them, how they're going to help them, if you're only talking about abstract ideas and romantic ideals and aesthetics, and you're talking about race and IQ and so on, you'll get a certain amount of people to go with you. But economics is still a fucking primary issue to talk about. So I hope this is somewhat informative for people. It's all these videos and things I make, I always hope to get feedback and start discussions, because I'm always limited by my own perspective. This is kind of a field that I know a lot about. So anyway, short presentation.